I have been trading for 6 years now and I've tried every single model, but this model right here actually gave me the highest win rate. It's very simple, repeatable every single day, and this is the track record for the year of 2025, and as you can see, I didn't have a single losing month. Now let's drop straight into the video, and the model I'm talking about is the continuation model. You simply need to follow 3 steps. First, you are going to pick the most profitable pair, which is going to be Nasdaq, and you are going to trade after 9:30 AM Eastern time. Second, you are going to wait for a 50-minute fair value gap to form. You are going to wait for the price action to retrace inside the 50-minute fair value gap, and you are going to take a lower time frame inversion fair value gap entry inside the 50-minute fair value gap. Let's pay attention to this example right here. So, of course, draw liquidity is very important as well, because if you want the price action to continue lower or higher, you still need a draw liquidity. But why the continuations are way better than reversal trades? Because the price action has already manipulated. Now it's more likely to expand, which is a distribution phase. What you simply do is you follow the distribution phase to the downside or to the upside. So let's say the market makers are moving the market and they are trending heavily to the downside. What you do is you simply follow the direction. As they say, the trend is your friend until it ends, of course. So in this case right here, my bias was simply for the price action to take out the trendline liquidity here to the downside, because as you can see, we had such a clean trendline liquidity, and you know this trendline will be taken. On top of that, we had this other trend line. On top of that, we had this low right here. So as you can see, it's very simple to actually predict the draw liquidity and the move to the downside, because we had all this liquidity right here. And what you do is you simply wait for the 9:30 to open, create a 50-minute fair value gap, wait for the price to retrace inside the 50-minute fair value gap, and you look for a continuation trade. So basically, the market opened exactly right here. This is a 9:15 candle, and we wait for a 50-minute fair value gap to form. And here we have the 50-minute fair value gap. What we do, the next thing is we wait for the price action to retrace inside the 15-minute fair value gap. I'm showing you this example because this was a trade I took on live as well with my VIP members. So, and this is a very, very recent case as well. So it still works, you know. Now that we got the retracement inside the 50-minute fair value gap, we simply drop to the 1 or 2 minute time frame. And in this case, I remember it was a 2-minute inversion fair value gap trade. So basically the price action accumulated and we had this 2-minute fair value gap. When the price action reacted first, it pushed the price higher, meaning that the price action was not ready to inverse yet. But pay attention right here. We even swept some buy side liquidity above this size. And as you can see, the candles are showing you that the price action is finding a lot of sellers inside this 50-minute fair value gap and after taking liquidity, and they are consistently rejecting the price lower. What you do is you simply wait for the price to inverse this 2-minute fair value gap. And let's keep it forward. And here we have the inversion with a displacement candle. We know displacement candles are very, very good because they show us the real intentions of the markets. In this case, we had the inversion candle right here and the price action inversed this fair value gap right here. What I did was you simply place a market entry, you cover the high of this displacement move right here, or the high of this candle, or the IFG, depends. In this case, I simply covered just the high of this candle here, and I simply aim for the 50-minute low, which pushed the price action inside the 50-minute fair value gap, because as you know guys, internal to external liquidity, basically this low pushed the price higher, we were bearish and the price action should have continued lower, taking this low, because what's the logic? If we continue to the downside, if we continue with a bearish trend, we should consistently take out the lows. This will change when, of course, the trend changes and goes bullish. But in this case, it was very simple. The markets were trending lower. We had the pullback and we are just expecting the price action to continue to the downside. What we do is straight to the TP, and of course we melt for the rest of this move here to the downside. So this was a very, very nice and high probability trade, which it was on 14th of January, as you guys can see, because the overall trend was super bearish. The markets were trending to the downside, as you can see. And why you got to go against the trend? If the price action is going extremely bearish to the downside, why you are trying to catch the falling knife at this point? Because the price action is trending, 4-hour bearish fair value gap, 1-hour bearish fair value gap, 50-minute bearish fair value gap. Why you got to look for long? If the price action is trending and displacing to the downside, you just follow that. If there is a friend we have in the markets, that's going to be only the trend, guys, because they say, of course, the trend is your friend until it ends. So I can guarantee you guys with the continuations, you can take continuations until the trend fails. Of course, you need to have the joint liquidity as well, but why? If the trend fails, at least the price action will give you 2, 3 or 4 continuations, and it's going to fail once. So statistically, if we take 3 winning trades and we lose 1, the win rate is going to be amazing. Worst case scenario, you are going to take 1 and 1 or 2 wins and 1 loss. Best case scenario, you are going to take like 5 or 6 wins and just 1 losing trade. So the win rate is amazing because you are following the market makers. Okay, the market makers which are pushing the price lower. We are not smarter than them. We can't hunt their stop losses. We can do none of those things. We simply can follow them and the market direction, and our win rate is going to be amazing. You see? 50-minute form, the price action delivered lower. We create another 50-minute, what the price action did, we displaced lower again. You see, guys, how the continuation models tend to work out very good. Here there was another trade. I didn't take it anymore because when I make money in the day, guys, that's it, I'm done for the day. As you can see, we went inside the 50-minute fair value gap. We had the tiny 1-minute inversion. Basically, the price action inversed here, and then it just went to the downside, taking out the 50-minute low. The same exact thing, you take the trade and you aim for the low that push the price action to the 50-minute fair value gap, because logically that's the weak low or the weak high if you take like a long continuation, because it failed basically to take out the high or the low of the structure, which automatically becomes a weak low because it's going to be targeted by the price. And another thing about the inversions, which I saw like one person asking me, why I didn't wait for both of these fair value gaps to actually inverse and make the price action continue lower. Because the correct way to look at the inversions, guys, when we have one leg which pushes the price action to the upside, you need to wait for the both fair value gaps to inverse in order to take a trade. But why in this case I actually took like the trade here without waiting for this inversion? Because the overall idea of the trade was so worthy that you could have anticipated this fair value gap fail, because overall like every single time frame was bearish. 15-minute continuation, the first fair value gap got displaced and inverse with a lot of volumes and a lot of volatility, and like literally there was no way this trade was going on stop loss. And at the 1-minute time frame, you see, guys, we had the trend line liquidity as well right here. You see this one here, another one formed here. I didn't even set the break-even point. I just like hold the price action and the trade straight to the downside. And yeah, this was the video, guys. Let me know if you have any questions down in the comments, and of course make sure to subscribe.